what drives the market. And my thesis or theory is that markets are basically the price discovery process is basically driven by what I call market cognition. And market cognition is this idea that there's a kind of an intelligence that drives the markets. And basically we can say that participants who have higher market cognition can do better than those who have less market cognition. And the market cognition is, really dependent on the participants and the price discovery process. One way to think about it would be on a trend day, and this is a really, contrived, trivial example, but on a trend day, at the very end of the day, it's everybody knows it was a trend day. It's obvious to everybody, but there's no profit potential. So the sooner you can recognize that, the sooner you can the better you can capitalize on that. I can give some other examples of market cognition. Another example for a trader with market cognition would be, let's say a trader has a large profit and they're coming into the day and there's an upcoming event that's a risk. So there's an uncertainty. And the trader says, look, I have a large or unusually large profit, and there's this event coming up that's an uncertainty, it's a risk. Therefore, I'm going to take my profits because I don't think the market is properly factoring in this risk, or it's discounting this risk too much, so to speak. And that's not really something you see in an indicator. It's really a concept. Of course, there's the VIX. You could say, well, that's volatility. But we're saying that the volatility is not incorporated into the market. It's kind of like the COVID. When COVID hit, that's a factor that wasn't in the volatility until it was. So market cognition, I think, is a good way to drive trading development process. It's basically this idea: if you have a better idea, you can have a better system.